Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video. Hi everyone, this is the second video of Departmental Accounts, and in the previous video we saw the concept of Departmental Accounts. We also saw how to distribute expenses among various departments. Allocation of expenses. Now if you haven't watched that video, then please go watch that video first. Okay, so I will put the links in the description. If you don't watch that video, then you will get confused over here, so please, I recommend you to please go watch that video first. Okay, so now in this video we are going to solve this simple problem just to start off the departmental accounts and practically see how to prepare these accounts. Okay, so here's the question. From the following information, prepare the departmental trading and profit and loss account for the year ending 31/3/2019. See, departmental trading and profit and loss account, that's what we prepare in this chapter, right? We prepare trading and profit and loss account comprising of more columns. Okay, depending upon the department, the columns will increase. Okay, each column will represent a single department. That's what we do over here. We prepare departmental trading and profit and loss account. It's completely same to the previous which we used to prepare trading and profit and loss account, just that this account will have a lot of columns. That's it. Okay, so that we can find out department's profits separately. So now coming back to the question, they have given us opening stock, purchases, wages and sales. See, now all these items like opening stock, purchases, wages, sales, and here closing stock, these items will be given to you and they will be given to you separately, okay, of each department. You don't have to allocate opening stock, purchases, sales, wages. No, they will be given to you separately. But other expenses such as office salaries is there, office rent is there, discount allowed, discount earned, that is income. So these kind of expenses will not be given to you separately. See, they have given to you as a whole amounts, okay, but you need to distribute them. That's what you need to do. You need to distribute them. Okay, they have given you the total of office rent, total of office salaries, total of discount allowed, so you need to distribute them among the departments. Here department X and department Y. Okay, we will see that how to do it. It's very easy. But if you have already watched that video, the previous video, then you have idea, right? Okay, good. Now they have also given us here other information. See, they have given us office staff. In X department there are 10 employees working, and in Y department there are 5 employees working. Okay, and they have also given us area occupied X 100 square feet and Y 60 square feet. And they have also given us depreciation on furniture, 12,000 worth of furniture at 10%. So the percentage of depreciation is also given. Here's also the same thing, depreciation on machinery of 80,000 at 5%. Now here they are silent about this. Nothing there is said. So if the question is silent about something, then you have to distribute it equally. Okay, now here depreciation will be distributed equally. Okay, remember that. Sometimes this question will specifically mention to do equally, but here nothing is mentioned. If you see over here, nothing is mentioned, so we will distribute this equally. Okay, and then we have got here interdepartmental transaction X to Y worth 16,000. So there has been transfer from X to Y, so we will also see that. Okay, and whenever there is interdepartmental transfer, what I told you in the previous video, we will treat from the sending department, we will treat it as sales, and from the receiving department we will treat it as purchase. Okay, so we will see how to prepare the departmental trading and profit and loss account. All right, okay, now let's solve this problem. Now let's solve this problem. See, the first thing that you need to do is, first you need to do the calculation of ratios. Whenever you get the problem of departmental accounts, whenever you solve a problem of departmental accounts, first thing that you need to do is the working notes. Okay, calculation of ratios. Okay, so first here we have purchases of department X and purchases of department Y, 40,000 and 32,000. So let's find out the ratio. See, now department X, we are doing purchases. Okay, purchases, right? So X and Y, how much? X is 40,000, it's given in the question. Okay, don't worry. And Y 32,000. all right, 40 and 32. Cut the zeros first. Okay, 3 zeros you cut. So what you get? You get 40 and 32, right? Now what you need to do is, now take any table, 8. Yeah, 8 5s are 40 and 8 4s are 32. So the ratio is 5:4. All right. See now next. Now next is sales ratio. See, sales is 90,000 and 60,000. So let's find out the ratio. See, sales is 90,000 and 60,000, right? So now again slash the zeros. All right, slash the zeros. 4 4. Okay. Now 9:6. Now we can make this even more simple, right? We can simplify this. 3 3s are 9 and 3 2s are 6, right? So 3:2 is the ratio of sales. And then next here we have office staff. Office staff is already given here, 10 and 5. So let's find out the ratio of office staff. That's simple. Office staff ratio. Office staff is 10:5, right? It's given there. 10:5, 10 and 5 employees. So we can simplify this even further. 5 1s are 5, 5 2s are 10. That is 2:1, right? And then next we have here area occupied. Area occupied is 100 square feet and 60 square feet. X 100 square feet and Y 60 square feet. So that's area occupied ratio. Area, okay, area occupied. Now this ratio is it's given there 100 and 60, right? 100:60. So slash the zeros. You get 10:6, right? You can simplify this even further. 2 3s are 6, 2 5s are 10. So 5:3 is the ratio. All right. Here 5:4, 5 3:2, 2:1, 5:3. And then next we have what we have again? Nothing. Okay, everything is over. All the ratios will calculate it. So first thing you need to do is you need to calculate the ratio. So we got the ratio of purchases, sales, office staff and area occupied. Now we will use this ratio for the allocation of expenses, for the distribution of expenses. Now let's prepare the departmental trading and profit and loss account. Okay, let's go. Now let's solve this problem and prepare departmental trading and P&L account. Now how to prepare trading and P&L account? Simple. We debit all the expenses and all the expenditures and we credit all the revenue and incomes. Okay, simple, right? That's the basic rule of preparing the trading and P&L account, same as we used to do in 11th standard. All right, just the difference is that here there are two columns. Okay, so let's start. See, the first thing they have given us over here is opening stock, and we know opening stock is always debited in the trading account, so we will debit that 10,000 and 16,000. Okay, so to opening stock. Okay, I'm writing short form, you write the whole. Okay, 10,000 and 16,000. It's given there in the question. Next we have purchases. Next we have purchases of 40,000 and 32,000. So we will take that. Okay, to purchases. Purchases are always debited in the trading account. To purchases 40,000 and 32,000. Okay, then next we have wages. See, we have wages 6,000 and 4,000. Now that wages are the direct expenses, so it will come in the trading account. It will be debited. Okay, wages are an expense, right? So wages will be debited 6,000 and 4,000. Simple. Then next we have sales. See, we have sales over here. Sales are of 90,000 and 60,000. Now you know sales are revenue, right? We get revenue from sales, so sales will always be credited in the trading account here by sales 90,000 and 60,000. Okay, it's given separately. Then we are given some expenses: office salaries, office rent, discount allowed, discount earned. All these are indirect expenses, so these will go to profit and loss account. Okay, and we have here closing stock, so that closing stock will be credited in the trading account. Okay, by closing stock. Okay, by closing stock. Now this closing stock is given as how much? 34,000 and 28,000. 34,000 and 28,000. Okay, 34,000 and 28,000. Closing stock is always credited in the trading account. And then they have told us that there are interdepartmental transactions Okay, there is interdepartmental transfer from X to Y of 16,000. Okay, so X has sent some goods to Y. Now I told you, whenever there is interdepartmental transfer, what happens is, when goods are sent from one department to another, here X to Y, okay, 16,000 worth of goods, whenever there is interdepartmental transfer, then one department, the sender department, will consider it as sales, and the receiving department will consider it as purchase. Okay, so the X department will be credited, because it's like sales to him, sales to the X department, and it is like purchase to the Y department, so it will be debited. Y department will be debited and X department will be credited. Okay, simple, right? Sales are always credited, purchase is always debited. That's the basic thing about interdepartmental transfer. See, it's very simple. You will take this into trading account. It says 16,000, right? So you will consider here, you will write here, see, Y department, receiver, purchase, right? Purchase of 16,000. So you will write over here to interdepartmental transfer. In the bracket you have to write X to Y. Okay, X to Y. So here purchase debit, right? So we'll debit the Y account here by 16,000. Simple, right? Debit the purchases. So you have debited it to interdepartment transfer, X to Y, 16,000, and here you have to credit. Okay, here the X, for X it's like sales, so it will be credited over here by interdepartment. Now I'm writing here short forms. Okay, you have to write the whole thing. By interdepartmental transfer, X to Y. For him, for X department, it is like sales, so sales will be always credited, okay, of 16,000, so it will be credited by 16,000. Simple, right? Here debit, here credit. Okay, so this is how you do interdepartmental transfer. Simple. Okay, now everything is over, right? Yeah, now let's tally the trading account. See, 60,000 and 28,000, that's equal to 88,000, right? 88,000. And then here 90,000, 34,000 and 16,000, that is equal to 90 plus 10, 1 lakh, 1 lakh plus 130, 140,000. Okay, 1 lakh 40,000. So we'll write that on both the sides, 140, 140 and 88,000. Now we will subtract it. Okay, so 88,000 minus 16,000 minus 32,000 minus 4,000 minus 16,000, that is equal to 20,000. Okay, so the gross profit here is 20,000. Now let's see of X department. 1,40,000 minus 10,000 minus 40,000 minus 6,000. Okay, that is equal to 84,000. So 84,000 and 2,000, 20,000 are the gross profit over here. So you will write it over here to gross profit. Now this gross profit will be transferred here as by gross profit, right? This gross profit will come over here in the P&L account as by gross profit. 84,000, yeah, 84,000 and 20,000. Simple. Okay, now interdepartmental transfer is over, trading account is over. Now let's do the P&L account. Now this is where the actual work start. Okay, see, now for P&L account, first we have office salaries. Now you need to understand to whom salaries are paid to. Of course, salaries are paid to the employees, to the staff. So here we have office staff, right? 10 employees and 5 employees. So that basis we will use it over here. Okay, we will use office staff ratio, that is 2:1. Okay, so we will take it over here to office salaries. Now how much was the figure of office salaries? It was 48,000. It is 48,000. Okay, it is 48,000. So you have to calculate now. See, 48,000, okay, 48,000 into, what's the ratio? 2:1. So into 2 divided by 3, okay, that is equal to 32,000. For X department, it is 32,000. And now for the Y department, how much? 48,000 into 1 divided by 3, that is equal to 16,000. Simple. Alright, now what's the next expense? Next is office rent. Now I told you rent means what? Rent means always area occupied. If the area is more, rent is more, okay? It's directly connected with the area occupied. Whenever something of land and building comes, always remember it's area occupied, okay? So here area occupied ratios is given 100 square feet and 60 square feet, and we calculated also, we made it simpler. So the area occupied ratio is 5:3. So now to office rent. Office rent, how much? Office rent figure, office rent is 32,000. It's given 32,000. Now let's divide that. 32,000 into area occupied 5:3. So into 5 divided by 8. Okay, that is equal to 20,000. Office rent of X is 20,000, and office rent of Y, let's see that, 32,000 into 3 divided by 8, that is equal to 12,000, right? So 12,000 will go to the Y department. Simple. Okay, next we have discount allowed. Now what is discount allowed? First you need to understand what is meant by discount allowed. Now discount allowed means whenever you sell something to a customer, you may give them discount to convince them to buy the product, right? So discount allowed is directly connected with what? Directly connected with sales. Whenever you sell something, only then you can allow the discount. So the discount allowed will be directly connected with sales, so it will be based on sales ratio. So discount allowed 8,800 figure. Okay, so discount allowed is an expense, so it will come over here on the debit side. Okay, discount allowed. Okay, discount allowed 8,800, right? 8,800 into 3 divided by 5, that is equal to 5280. So the discount allowed of X department is 5280, and of Y department 8800 into 2 divided by 5. Okay, that is equal to 3520. 3520. Next we have discount earned. Now discount earned is also known as discount received, right? Discount earned is also known as discount received. So whatever discount we receive when we purchase something, that is what is meant by discount received or discount earned. If we purchase something of 1,000 and the seller gave us 100 rupees discount and we bought it for 900, then that means 100 is a gain for us. It is discount earned. Okay, so that would be a gain, that would be an income for us, right? So the discount earned will go on the credit side of the P&L account. Okay, and this discount earned is directly connected with what? Directly connected with purchases. It is opposite to discount allowed. Now this will be based on purchase ratio. Simple. So this will be credited over here by discount received. Okay, discount received or discount earned, whatever you can write. Alright, no problem. Now this discount earned will be based on purchase ratio 5:4. So let's calculate. Let's see first the figure. Discount earned is 2880. So 2880, okay, into now 5:4, right? So into 5 divided by 9, that is equal to 1600. So you will write it over 1600 in the department X, and in the department Y 2880 into 4 divided by 9, that is equal to 1280. Simple. Okay, after that we have over here, then we have in the other information, if you see over here, we have depreciations, right? We have depreciation on furniture of 12,000 at 10%, and depreciation on machinery of 80,000 at 5%. So now depreciation, what is depreciation? Depreciation is like a loss or an expense, so it will come on the debit side. Okay, now they have not mentioned a single thing over here. Now there are no assets given, so we cannot just divide it on the basis of assets. So nothing is given, everything is silent here. So whenever the question is silent about something, you have to just divide them equally among the departments. Okay, so we will do this equally. Now the depreciation will become over here debited in the P&L account to depreciation. Okay, in the bracket, but in the bracket you have to write. Okay, first is furniture, right? Now furniture, they said furniture worth 12,000. So 12,000. Okay, you will take 12,000 into how much percentage? Percentage of 10%. Yeah, 10%. So that is equal to 1,200. Okay, so furniture is 10%, 1,200. And then they said machinery of 80,000, right? Machinery of 80,000. So machinery of 80,000 at the rate of 5%. So 5% means 4,000. Okay, 5% means 4,000. So 4,000 will come over here. Now if you add these two, you get 1,200 plus 4,000, you get 5,200, right? 5,200. Now this 5,200 has to be divided equally. Okay, 5,200 divided by 2 departments, right? Divided by 2, that is equal to 2,600. So 2,600 each. Okay, 2,600 for each department. All right, so the depreciation is also over. Next, nothing, everything is over. All right, so we are done now. Now we will just find out the balance. Okay, so let's see now the here in the Y department, if you see 16,000, 12,000, 3,000, 2,000. So here the debit side looks bigger, right? 16,000, 12,000. Let's see, 16,000 plus 12,000 plus 3,520, 3,520 plus 2,600. Now the debit side is 34,120. Okay, but if you see over here, it's only 20,180. Yeah, so the debit side is of course bigger, so you will write that balance on both the sides. Okay, not balance, the total amount 34,120, and here also 34,120. Simple. And if you see over here, it's 32,000 on the debit side, 32,000 plus 20,000 plus 5,280 plus 2,600. So here it is 59,880. Okay, but here it is 84,000, so it's of course this is bigger. So 84,000 plus 1,000, 85,000, 85,600. So the credit side is bigger over here, 85,600. Okay, here also 85,600. Now let's just balance these two departments. See, now let's take this 34,120. Okay, minus of Y department. Okay, 34,120 minus 20,000 minus 1,280, that is equal to 1,2840. So it is net loss for the Y department by net loss of 1,2,840. Okay, 12,840 is the net loss for the Y department. And here too, of course here it will be net profit, is already calculated, right? So here let's see, 85,600 minus first figure 32,000, then 20,000, then 5,280, then 2,600, that is equal to 25,720 profit. Okay, 25,720 is the profit. All right, simple. 25,000. So we found out the net profit and we found out the net loss. So the X department is in profit and the Y department is in loss. Okay, Y department loss, X department profit. So now the management has to decide. Our work is over, our accountant's work is over. Now the management has to decide the policies for each of these departments. Okay, so this is how you prepare the departmental trading and P&L account. All right, simple, right? Very easy, right? Okay, now let's do a quick revision of this departmental trading and P&L account. Now how did we prepare departmental trading and P&L account? Simple. We debited all the expenses and we credited all the incomes. The first thing that we did was we debited the opening stock. Now we know always opening stock is debited and the closing stock is credited, right? So the opening stock and the closing stock were given, separate figures were given. So 10,000, 16,000, the closing stock 34,000 and 28,000. Okay, then we took purchases. See, purchases were also given separately, 40,000 and 32,000. Now the purchases are always debited in the trading account. Same with the wages. Wages are direct expenses, so wages are always debited in the trading account. And then we took sales. By sales, 90,000, 60,000. Sales were also given in the question. We took the sales. Sales are revenue, so it is credited in the trading account. And then we got interdepartmental transfer. Now you know, whenever there is interdepartmental transfer, the sender department will consider it as sales, so it is credited because it is going out. And in the Y department, the receiver department, the receiving department will consider it as purchase, so it is always debited in the trading account. All right, so the same thing that we did. See, now here Y department is like purchasing those goods. Okay, so it is debited here, and here X department is like selling. Okay, making sales, so it is credited over here by 16,000 in the X account and here in the Y account. Simple. Okay, and then we found out the gross profit 84,000 and 20,000 by balancing the trading account, and then we transfer this gross profit here as buy gross profit, same 84,000, 20,000. Okay, here to buy gross profit, and then we took one by one, we took all the expenses. First we took office salaries. Now office salaries are given to employees, so it is apportioned, it is appropriated, it is distributed on the basis of office staff ratio. Okay, then we got office rent. Now rent is paid on the space occupied. How much space you occupy, that much rent you have to pay, right? So the office rent is directly connected with the area occupied or space occupied, so on that ratio we distributed the office rent. And then discount allowed. Now the discount is allowed on sales, right? So the discount allowed is directly connected with sales, so it was based on the sales ratio. Okay, we distributed it with the help of sales ratio. And then the depreciation was there given in the question, but this question was silent about depreciation. No ratio, nothing was given, so we had to divide them equally. Okay, simple. And then here there was also discount received, so that discount received is directly connected with purchases. Whenever we purchase something, we get discount, right? We earn discount, so that discount is an income for us, it's a gain for us, so it was credited over here. Okay, and we divided that with the help of purchase ratio. Then after that we balanced the P&L account and we found out that the Y department was in loss and the X department was in profit. Okay, so we balanced this account, we did the trading and P&L account. Simple. We found out the profit and loss made by each of these departments. All right, simple, right? Okay,